I'm going to explain something to you about crypto that's going to expose the truth behind a lot of these coins. It has to do with the token supply. Pay attention to this video because a lot of you guys are getting force-fed the mainstream media of crypto, the mainstream opinion, the consensus opinion, and a lot of the information that you're getting when you go to YouTube or Twitter and you're looking at KOLs, that's what they call them, key opinion leaders, influencers, right? It's like a nicer name because influencer became a dirty word. They're all paid off for the most part in crypto. Not myself, not a lot of the PulseChain people, but a lot of the other tokens out there. Look, here's the dirty truth, okay? They got VC insider funding, and those VCs, they're accredited investors, they're hedge funds, they're venture capital funds. They're rich guys, and they're not you. They're not you, they're not retail. Okay, I consider myself retail, even though I've done very well in crypto. I'm not part of a venture capital fund. I'm not trying to sell something to you that I'm simultaneously dumping. Okay, I'm telling you about coins now like PulseChain and Hex, because they're low, because it's early, and because I believe that they have a lot more potential to go. I haven't gone anywhere in the last 4 or 5 years talking about this ecosystem because that's how much I believe in its potential. But you have to realize this is the norm in crypto. Token unlocks. All right, token unlocks, and we're going to talk about the supply of different tokens. We're going to expose some tokens like Molestia. Some people call it Celestia, but that's what they're doing. They're molesting you, okay? So on October 31st, look, 2 giant token unlocks, namely Optimism and Celestia, tickers TIA. Okay, but there's also Aptos, Axie Infinity, Arbitrum. These coins are being shilled to you by insiders that need exit liquidity. They need exits, and it's very, very simple. You know, you go to most of these websites, all right, you go to most of these coins, you go to most of these chains, and you can look up all the statistics, and most of them will have a pretty little pie chart like this. That'll make it seem harmless because, oh, look at how colorful it is. It's a little pie chart. Look at all the different allocations. We're being honest with you. They are being honest with you. And people think they read this and they say, oh, okay, well, that all makes sense. You know, I understand this. But do you really? Do you really understand it? Do you really understand what initial core contributors means or early seed round investors means? These are venture capitalists that need exits, and they're happy to exit for a 3x, 4x, 5x, even just a 10x. Okay, so as these coins are pumping, even R&D, all of these sections of the pie chart, it's sell pressure, guys. It's sell pressure. I actually made a little bit of a modification to this to try to explain to you what I mean. Look, this is the token supply, and I'm just picking on Molestia because it's easy to. Okay, it's easy to pick on this one because it's just so typical. You look at all these, Aptos, Sui, Arbitrum, they're all the same, okay? Insiders, dumping is the name of the game. Initial core contributors, maybe like founders and developers, they're going to dump. They're going to dump on you. They basically printed themselves a whole bunch of coins on day one and allocated it to themselves, and they can't wait to generate demand and then dump. I mean, that's really all of crypto. Let's be honest here. We all want to sell our coins at a higher price than we bought them at. But these guys, you know, they have to sell typically as just a matter of business. Okay, this is like their business is dumping coins and generating demand. Look, 15.9% goes to early backers seed round. These seed round, they need exit liquidity. Then they got early backers, series A and B. Okay, this is like, they're treating cryptocurrency as if they're a traditional stock, like in the NASDAQ, or as if it's like a tech startup. A really, truly decentralized cryptocurrency should not be treated like a tech startup, right? It should be treated differently. Yet this mentality of we're in early, you know, it's like when a stock IPOs, right? After an IPO, what do you see in the price of every single stock that IPOs? Like look at Coinbase, for example, in 2021. The moment they IPO'd, boom, down 90%. Straight down. Why? Because by the time retail, you are hearing about it, the public, the plebs, okay, that's you, the public allocation. They probably meant to say pleb allocation over here, but, you know, HR probably had an issue with it. That's what they think about you guys. They can't wait to dump on you guys. And even research and development. R&D, that stands for research and development, right? Where do you think all the money for the research is coming from? It's coming from dumping the token. Because they can't just pay people in, you know, TIA token and say, hey guys, go work your ass off for 2 years and do a bunch of research for us. We'll give you these magic made up internet money. We'll give you these TIA tokens. No, that's not enough for people to do work. So if you're paying people to do work for you, which is research and development, which actually might be a security now that I think about it, but let's not even talk about that because that's a totally different subject. R&D, by the very nature of what it is, they have to dump the coins. I mean, people don't work for free. Just like early backers. When you read early backers, seed round, series A and B, These are people that are happy to exit for a 2x. They're happy to exit for a 3x because when they're putting in millions, and they can double or triple their money. And you could say, oh, well, they have vesting and there's a cliff and they got vesting, of course. But like with the token unlocks coming out, here's a good example. $1 billion worth of Celestia is coming out at the end of October. Now, of course, these guys are going to be strategic. They're not going to dump it all at the same time. But I think retail needs to be smarter about what's going on. That's why I'm exposing to you the secrets here. Okay, this is how crypto works. Now, the reason I like the dynamics of PulseChain is because our pie chart of the supply breakdown of the PulseChain ownership is a lot different. You'll notice it looks a lot different than the insider VC coins. Okay, the people, retail, it's part of why they like meme coins so much is because they feel like they've actually got an honest chance. And PulseChain being the freedom of speech blockchain, power back to the people, it's an organic grassroots community. It's by the people for the people. And the supply breakdown goes a little bit differently. Yes, you've got 90% of the supply owned by a single dude, a single entity. But this guy for the past 5 years hasn't dumped a single coin. And by the way, it doesn't matter if it's Hex, PLS, PLSX. Okay, these three coins, they basically all have the same looking pie chart. It's not a perfect 90-10, but it's mostly, maybe it's 11%, 89%. I don't know the exact number, but in general, the large lion's share, okay, the vast majority of all the coins is owned by a single guy, or maybe it's a group of people. We don't know. We don't have any expectations, right? Could be a duck. Could be a Nigerian priest. All we know is that this guy's actions speak louder than words, even though the words that the founder has been saying about this, Richard Hart, founder of all these coins, he's basically saying, look, guys, I'm already rich. I'm loaded. I don't need any more money from you guys. I'm doing this for the glory. He's just doing it to win. He's doing it for the love of the game because he's a bored, retired entrepreneur that just almost for the lulz. But he wants to be the best founder. He wants to have the best coins. And to be honest with you guys, if you look on chain, remember, provably on chain, you can't lie about this data. Not only does this one guy who owns a lot of the supply, not only does he not sell, he's also been spotted buying his own coins. I mean, this is unlike any single founder in the game. Charles Hoskinson, Cardano, Vitalik Buterin, Ethereum. The Ethereum Foundation, they dump Ethereum all the time. They've got to pay for stuff. They got to pay for research. They got to pay for, a new house. Vitalik wants a new house. He wants to give his mom a new... Sure, whatever. People deserve to take profit. I'm not saying taking profit's bad or selling is always bad, but, you look at all these other coins and their founders. Charlie Lee, founder of Litecoin, sold all of his Litecoin. Became super rich and then claimed he sold all of his Litecoin because, it's a conflict of interest. Well, I want that conflict. Don't you want that conflict of interest? Why would you should want somebody to be conflicted about their interest in pumping their coin? And then the moment that Charlie Lee dumped all of his Litecoin, this is just an example. I think it was 2017, many years ago. Well, you haven't gotten a single update in Litecoin since then. It's funny how that works, right? It's funny how incentives are aligned where when you have skin in the game, you behave differently. Charlie Lee, he dumped all of his coins. Oh, I don't want to have a conflict of interest. He also wants a big payday. And then is it really shocking to you that he stops giving a crap about Litecoin? No more updates since then. Litecoin's basically just a dead coin. All these things he promised or planned on doing. Well, it's kind of hard to care when you don't have any money, any coins, and you're already rich, retired, and then you just dumped all the coins publicly, claiming it was for the greater good. When really, it's okay. He's retired, whatever. Let's not pick on Charlie Lee too much. But this is the playbook of every single coin, and this is why PulseChain, Hex, PulseX are so different. And you've got 10% of the coins owned by the community. Okay, and if people want to get more coins, they have to buy their way in, including the founder, who's also been seen buying his own coins in the past. What other founder buys their own coins? Most of the time, you get pre-allocations, and these people just can't wait to perma-dump. Just turbo dump. Dumping left and right. So just tell me, which pie chart would you rather have? This pie chart or this pie chart? I know which one I'm picking. Okay, I know which pie chart that I like. I like the supply to be owned for the majority by the community, not by a bunch of vultures that are circling over my head, flying over my head, that just can't wait to dump on me. Now, of course, you're going to have people selling at all times. You've got people, including myself, in PulseChain, I can't wait to take some profit later on down the line. Not right now, but later on down the line, can't wait to take some profit. But the only people you have to be angry about that the price is dumping in, the PulseChain, Hex, and PulseX coins, for example, is each other. The only person you could be mad at is some other guy in the community that's selling because maybe he's dumping before you or you decided to buy while he's selling. Look, it's a more fair playing field. It really is. I mean, that's all markets, okay? All markets are just people that buy low, sell high, or buy high, sell low. They get interested whenever they get interested. Some people do the contrarian thing, which is the hard thing to do, which is buy when it's not popular, which is right now when everybody hates it. You'll never see a good article about Hex or PulseChain or PulseX. I think the people, including myself, that are buying now are going to be rewarded later on down the line. That's all markets, right? There's always going to be someone that buys the top, and if they're not willing to hold it long enough before it makes a new top, then they're going to get scared and shake themselves out and sell. But I'll take a more fair market than all of these traditional cryptos that pretend like they're stocks almost, because they're trying to fit this old paradigm, this old way of thinking, and they're trying to take, Silicon Valley tech company, tech CEO, and they're trying to overlay that paradigm onto cryptos, which should be decentralized and shouldn't have all these unlocks. So look, what does this article say? Is sell pressure incoming? Look, guys, the people are catching on. The people are catching on. Even this crypto economist article says that even though it's a serious and long-term investment, sure, okay, bro. This one's a serious long-term investment, but it's extremely difficult for the price to have $1 billion coming on the market. From who? These guys. Guys, 80% of the coins, 80% of the coins are being unlocked and cannot wait to dump on you. And I'm picking on Molestia, right? Like, it's true for a lot of different coins. This pie chart, a lot of different coins, they just copy and paste this pie chart and they've changed the numbers around a little bit, but generally it's 80-20. And us little old plebs, us retail public, only get 20% of the coins. Now, I'd rather get 10% of the coins if you're telling me that the other 90% is diamond-handed and they're not going to dump it all. And for people still scared that, Richard Hart's going to dump all the coins or whoever, whatever group, whatever trust, whatever company owns these coins, they haven't dumped yet. If you're still scared about him dumping one day, then don't buy the coin. Don't buy it. But the obvious bet that we're taking in crypto with the PulseChain ecosystem, with Hex, with PulseX, is that it's very simple psychologically. Why would somebody nuke their own project? The total liquidity for all these PulseChain coins is only a couple $1 million anyway. You think a guy that's already a billionaire is doing all this just to extract $50 million out of people? Because that's how much liquidity there is on the stablecoin side. Literally, there's like $50, $60 million of stablecoins total liquidity here. Why would he be doing all this work for 5, 6, 7, 8, 9 years? I think it's been like 9 years Richard's been putting out crypto content and building coins and stuff. I mean, is this the longest con in the entire world? Or does maybe this guy actually care about making a good product and care about making people rich? If you don't believe that, don't buy it. Don't buy it. Go buy Molestia. Have fun. Okay? Have fun chasing Solana, the consensus play. Every single influencer out there, oh, is Solana going to overtake Ethereum? That's like the mainstream thing to say. It's so cliche at this point. I already did a 10x. There's all kinds of FTX investor money that needs exits, and hence you've got the whole meme coin thing going on Solana. Look, I don't want to get into how you can use meme coins to launder money, but I suspect that's going on in a lot of these centrally owned coins, and they're all centrally owned. But who do you want to be your central owner? Do you want it to be a guy that cares? A guy that doesn't dump? A guy that's in it for the lols, in it for the glory? He's in it to be the best, to win the game? Or do you want a bunch of people that basically want a cash grab? They want to capitalize on this. They might not sell all their coins, but they can't wait to buy mansions and yachts, and they can't wait to dump on you. And here's one more thing. The people that get the most triggered by me exposing this information, the people that get the most angry, just like the people that are screaming and yelling and crying that Richard's a scammer, or that, all the PulseChain people are scammers, Hex people are scammers, we're like some of the only people not being paid off. And a lot of people project their anger because we ignite something inside of them that they recognize in themselves. Like, the people that get the most angry about this video, people shouldn't be angry about this because, it's large majority true. But people will come up with all kinds of reasons. But we have a vesting schedule. We're not dump. Like, we all are in this to make money. And everyone's covering up their greed with whatever narrative that they tell themselves and they tell other people. People lie to themselves too. Like, oh, well, it's actually very good world-changing technology. And sure it is. But you also want to make money, don't you? And we're the ones admitting that. the community, the PulseChain community admits that we're all in this for the money. You can be in it for the tech and you can be in it for the money at the same time. But the people that this triggers the most are the people that are the most afraid to admit this to themselves, that are most afraid, that basically lie to themselves. You're telling me that the VCs, the Series A and B round in, I don't know, let's say Aptos, you're telling me that they cannot wait for an exit? They can't wait to dump all their coins. Money is a funny thing, okay? Money is the underlying factor, and we're lucky that this crypto stuff is working because luckily the greed is actually driving the technology forward. And the technology just so happens to be a very liberating technology, free, open, borderless, peer-to-peer digital money. It's actually good for humanity. It's great for society. But we also like to be, people like to be self-righteous. They like to say, well, I'm not in this for the money, bro. Come on, it's okay. It's okay to want money. It's okay to want to make money. You just got to realize that all these seed round and VC investors and hedge funds, their business is making money. They love making money. And if they invest $10 million and they can turn that into $50 million, why wouldn't they do that? It's very simple human incentives. I mean, you could even look at some of the people that hate on Richard Hart the hardest. Like that one guy, like that Australian guy that was, he was calling Richard a scammer. Meanwhile, he was exposed, like begging for money and begging for loans from all the other influencers to go leverage trade and then lost all their money. And he's not around anymore. I don't know if he got sued or if he got arrested, but yeah, he got arrested. I mean, I think he got arrested for losing everyone's money. I mean, look at Alex Mashinsky. Look at how angry Alex Mashinsky got about Richard Hart twerking in a Gucci suit. Who's the one in jail? Who's the one that actually deliberately defrauded investors? The hypocrisy is very mind-blowing, and the truth angers a lot of people. But anyway, I'd rather gamble that the origin address entity, which is what they call the 90% owner entity, and Hex, PulseChain, PulseX, I'd rather gamble that this guy is not going to wreck their own project. Just like, why would Elon Musk dump all of his Tesla shares? Why would Jeff Bezos dump all of his Amazon stock? These people aren't psychotic, okay? They're not like suicidal. They're not going to go AWOL. And if they do, okay, whatever, I was wrong. I'm willing to be wrong about that. But I'd rather trust one guy not going totally AWOL than all kinds of guys. Who knows how many early backers there are? All kinds of VCs, all kinds of founders. I don't even know who's doing this research and development. This could just be money laundering. They could just be giving it to themselves and saying they're doing research. And, oh, we didn't find anything useful, but thanks for all the money for that research. And you don't know the names. You don't know the faces of these people. And they own 80%, and there's a whole lot of them. And they're sharks. Okay, they're sharks. So guys, you make the call at the end of the day. Just know that PulseChain, Hex, PulseX, these are the contrarian plays. These are the anti-establishment, the anti-mainstream. The reason crypto was invented, truly decentralized from a technological point of view, because nothing is decentralized economically. Okay, if you distributed all the world's money, gave an equal amount to everyone, look, 50 years later, 90% of the money would still be owned by the 1% of the world, because they'd figure out a way to redirect the money, and either through corruption or just through providing value, good old-fashioned goods and services and providing value, the money is going to end up in the hands of the few. So economic decentralization is a myth, all right? You can't, that's like communism, okay? Oh, everybody should have a fair shot. Everyone should have an equal slice of the pie. We all know that doesn't work. I'm not going to make a video explaining why communism doesn't work, but people talk about centralization. Look, every coin has economic centralization. There's people that own more money than you, or that own more coins than you. Every stock, like almost all the houses are owned by BlackRock or Berkshire Hathaway. Not by retail. What if Berkshire Hathaway dumps all their properties at the same time? Why would they, guys? It's so obvious. It's because of aligned incentives. It's because of skin in the game. It's because they have more to gain by not doing that than liquidating their entire supply. But it's technical decentralization that matters. What matters is not who owns more money than me. What matters is, can anybody shut this thing off? So a lot of people ask the wrong question. They conflate the two. They say, oh, it's centralized. Bro, so is every coin. So is every single coin. I'm sure there's a guy out there that owns way more Dogecoin than you that could dump the price negative 50% in a single click. Is that going to stop you from buying Dogecoin? Well, it doesn't stop a lot of people. What if Satoshi rises back from the dead and dumps all of his Bitcoin at the same time? Are we all going to lose sleep over that? It's been working out okay so far. It's been working out okay. So from a technology point of view, I like my stuff decentralized. I like that a corrupt middleman like a government, SEC, doesn't matter, Federal Reserve, no one can shut these things off. Whether it's Bitcoin, Ethereum, PulseChain, Hex, they all have the same level of decentralization. Not economic decentralization, technical decentralization. Economically, hey, did you know that Bitcoin, 40% of the Bitcoin supply is owned by the top 0.1% of addresses? Here's the Bitcoin rich list, just to prove that to you. Look at this over here, guys. 98% of all the Bitcoin, 98% of all the Bitcoin in the world is owned by 8% of all the addresses. 92% of all the Bitcoin is owned by less than 2%. Is that fair? Okay, that's just capitalism. That's the economies. That's how they work. It's really hard to start a cryptocurrency and give an equal amount to everybody. They've tried it before, actually. If you give an equal amount to everybody, you have what's called tragedy of the commons. It doesn't work out. You need some people to care more than others. And I just don't have faith that these guys care about building the future of finance and, backing up their communities, supporting their price. I just have a sneaking suspicion that they really don't care as much as this one guy, this mysterious man who's never seemed to have sold a coin in 5 years and counting, and who's only been seen buying coins, buying his own creations. If you choose to believe it's Richard. Okay, I hope this exposed a lot of what's really going on in crypto. Again, if you're brand new, this is what's going on. Be smart out there. Make sure you like, subscribe, share the video, leave a comment, and make sure other people can learn this information so that you're not a victim, a retail pleb that's getting trapped by the consensus narrative that's bought and paid for. It's being shoved down your throat. Solana, bro, Solana, was it going to flip Ethereum? Who cares, man? Who cares? Look at the ownership. Do these people have your best interest at heart? You really get to decide at the end of the day. Its choice is yours. Okay, you don't have to believe me. You don't have to think like I think. But you need to decide. Do you want mainstream or do you want counterculture? I like it. I like counterculture because it actually aligns with the reason crypto was invented. And I just so happen to believe that there's way more potential for these things to pump. Guys, if you're brand new to crypto and you want to learn the absolute basics, get the course, hexpassiveincome.com, link in the description below. Hexpassiveincome.com, limited time offer, 25% off. It's like 25 hours of content, teaches you everything you need to know. So if you know nothing about crypto, and if you want to learn the right way, if you want to get the confidence to have a good starting place, you need to get this course, okay? Get it before it's too late, before the train leaves the station. I'll see you on the next video.